Hi everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we are diving into Lincoln Educational Services Corporation's proxy statement. It's a document that might seem dry at first, but trust me, it's like peeking behind the curtain of a company's decisions and who's really in charge. It's like finding out what the teachers are really like after school ends. This filing is a definitive proxy statement, meaning the company has finalized it and is ready to present it to shareholders for a vote. This document tells us about the upcoming annual meeting where shareholders get to vote on important things like who gets to be on the board of directors, how the top executives get paid, and who the company hires to check its financial books. The main purpose of the annual meeting is to vote on several key items. Shareholders will elect 10 directors. Also, they get a non-binding advisory vote on executive compensation, which means they get to voice their opinion on whether the company is paying its top people fairly. Finally, they ratify the appointment of Deloitte & Touche as the company's independent auditor, essentially giving the thumbs up to the accounting firm. If you're a shareholder, pay attention. This document and the annual report are available online. It's the best way to know what's happening. The meeting is virtual, meaning you can attend online. If you are a shareholder on March 20, you have the right to vote. You will need a control number to prove you're really you and not some random. 10 people are nominated to be directors. The company wants you to vote for all of them. These directors are the decision makers at the very top. They shape the direction of the company. Let's check out who owns the company. The biggest chunk belongs to Juniper Investment Company with 8.9% of the shares. Next is BlackRock, holding 5.3%. Then there are the company insiders, the big bosses and board members. Scott Shaw, the CEO, owns 3.5%. It's important to know who the major players are because they have a big influence. Lincoln uses something called the 2020 long-term incentive plan to try to get its people at the top to care about making the company do well for many years, not just a little bit. Under this plan, execs can get things like stock options or restricted shares. They can surrender shares as payment of applicable income tax, which is a common thing in the corporate world. The intention is so that executives work hard, so the company does great over time and everyone wins. Let's talk money, specifically executive compensation. In 2024, the top 3 names are Scott Shaw, the CEO, Brian Myers, the CFO, and Chad Nice, the Chief Operating Officer. The company says it wants to pay executives based on how well the company does, both in the short run and the long run. The company did well. Revenue jumped by 16.4% to $440.01 than last year and ended up making almost $10 million as net income. Something else worth pointing out is they opened a new campus in Georgia. The company says they have a pay-for-performance compensation philosophy, meaning executive pay is tied to the company's results. They rely on an independent consultant, cap annual bonuses, and clawback policies, which is to make the executives pay if the performance isn't real. This is meant to keep people honest. The compensation committee wants to make grants at about the same time every year, according to a schedule they made. They also are supposed to not use secret non-public information when making pay decisions. Looks like some of the executives got a raise. Scott Shaw's salary went up 30% to $650,000. Brian Myers went up 11.4% to $400,000. And Chad Nice's rose 25% to $375,000. The company is saying these raises are justified because the executives have been doing a good job and are worth more in the current market. The company has something called a Management Incentive Compensation Plan, or MIC plan. Under this, if the company hits certain targets, the executives get a bonus. In 2024, the adjusted EBITDA, a measure of profit, went above target, so the top execs earned 105.9% of what they would normally get as MIC plan. This is something called unvested stock. It's basically company stock the executives will fully own at a future time. The hope is that by giving them equity, they will care more about growing the business for a long time. This can be worth a lot of money. Here's how much the company pays its board members. For being on the board, most of the members get about $55,000 a year. On top of that, the company gives them about $60,000 in stock. If you're the head of an important board committee like audit committee, you can get an extra 15 grand. The following table shows for the last 3 fiscal years the total compensation paid to our named executive officers as reflected in our summary compensation table. Compensation actually paid to our named executed officers as determined in accordance with applicable rules. Our total shareholder return and our net income went from roughly $8 as Scoffonnen's numbers. So for the principal executive officer, Scott N. Shaw, the total compensation in 2024 was $2,500 for the principal dollars and 908 versus 510 Shaw. The total compensation in 2024 was 2,512 for vols and 557 2024 was 2,512 and fives on a $100 investment versus $645 was 2,545. The average compensation total for the non-principal office 18 million to 26 million and then went down to roughly 10 million into 22 after the average compensation total for the non-principal officers is around $1 million or for total shareholder return. The result is a return of 200. This explains the relationship of pay compared to the overall company's wealth. These type of charts try to demonstrate how fair executives' pay is to other shareholders. The report mentions the audit committee. Basically, the audit committee makes sure the company's financial statements are honest and correct. They work with the company's outside auditor, Deloitte and Touche, to review the company's work. How much did Deloitte and Touche make last year? Well, it's broken down into a few categories. Audit and audit-related fees were roughly $1.2 million. Tax fees were about $314,000. All other fees were only $2,000. Lincoln wants you to vote to approve them hiring Deloitte. Again, if you don't vote for them, they might hire someone else. Even if you do vote for them, they still might hire someone else. It's just a suggestion to take into consideration. Want to know a secret? You can ask for all these documents and the company has to send them. Shareholders who want to make proposals at next year's meeting need to have them in by September 7. Otherwise, the company will probably ignore you. So what's the real story here? Lincoln is growing and making more money. Executives are getting paid more, but overall everything looks pretty good. There are no notable risks. The company is in a good shape. The company is heading in a positive direction with growing revenues and solid financial management. The executive pay seems high and they have all that cash. Maybe consider a dividend. That's all for today. Thanks for sticking with me. Don't forget to like, subscribe, and comment below. See you in the next one.